he's looking at fiat and he's saying, I think this is a scam. I think this is a Ponzi. And
fiat's the Ponzi. Yeah.
Fiat's the Ponzi. And I'm going to lean into Bitcoin because I think it's going to continue to have this growth and this network effect and adoption across the world. And I'm going to stack that and I'm going to denominate liabilities in fiat.
Preston Pysh back in the house. I'm so happy to see you, sir. Thanks so much for joining me.
Hey, great to be here. Always fun to chat, Nat.
You know, I saw you on Danny's podcast today and I thought, I just got to call Preston and we've got to record just so, you know, we bang him out for people that want their Preston Pysh fix.
Oh my. You know, I can understand if people are frustrated on this whole Bitcoin Treasury stuff. And I know it's so much financial jargon and I don't know what else to say other than I'm trying to like explain some of it. But I understand it's probably not the most pleasant thing to listen to, I guess. I don't know.
No, and just FYI, we had this scheduled before I knew that Danny was coming out with this show, but we'll touch on some new things in case someone's binge watching these. But by the way, Preston, I have this very bright college student that created an AI model and ran analytics on my channel. And do you know who the top converting guest is to a subscriber on my show?
Who's that?
You. Apparently, when people watch you on my show, they automatically become subscribers. So thank you.
Wow. Oh, you're welcome. You're welcome.
I'm just giving the audience what they want. Okay. Well, first of all, I mean, how are you doing? I would love to get an update. You've been doing a lot of exciting things and congratulations on the second raise for Ego Death Capital. Just any updates with you?
In general, that's keeping me busy these days. You know, just kind of looking for companies that are building in Bitcoin and doing it in, you know, a sound, ethical, responsible kind of way that's like buying real equity. It's a full-time job, that's for sure. And we're having fun doing it, but it's a lot of work. It's a lot more work than I ever thought. So you know,
well, I bet it's very rewarding work. I wanted to bring you on because people are feeling so bearish right now. I mean, sentiment has gotten crazy, especially around the corporate Bitcoin treasuries. So I would love to get your reaction. Why is everyone all of a sudden so down on Bitcoin and becoming bears?
I think at large, I think you have, now that the institutions are here, they're doing very institutional like things, which is turning Bitcoin into a paper derivative on top of Bitcoin. And for all intents and purposes, like I would say up until the ETF launch, it was very clear whether something was being built on top of Bitcoin or it was some type of ICO token scam kind of thing off to the side. And so there was like this bifurcation. Either you're in this camp or you're in the camp that's creating these clown coins and trying to convince people that it's somehow going to be valuable someday. And now that you have the institutions showing up and they are creating derivatives of Bitcoin, there's a lot of people that are concerned as to, first of all, what's the impact of that long term? Second of all, am I being scammed like all the other scams that preceded this? This wave that we're currently in. And I think that at large, like part of the Bitcoin culture is to be pretty much skeptical of everything and to question everything, because pretty much everything we've been told, you know, up till now has been kind of a lie in the way that the economy works and how things work. So I think you have a bit of a culture clash that's kind of coming to head there. That's causing a lot of the sentiment and a lot of the frustration that you're seeing. And, you know, if I have to speak candidly, I think it's healthy. I don't necessarily see it as a bad thing. I think that a lot of it is healthy, but I would also caveat that with, you know, if we warp ourselves 10 years into the future, how do people see Bitcoin being used? Is it something that is pretty customary to have Bitcoin on a company's balance sheet, a publicly traded company's balance sheet? How do they want to own it? Do they own it through IBIT or do they actually own the coins? And for people who have kind of made Bitcoin what it is, that getting it to here, getting it to over $1 trillion involved individuals for the most part, self-custodying Bitcoin, holding on to the keys for dear life through 70 and 80% downturns and still not selling them because, the term we like to throw around is we're Bitcoin psychopaths. And part of that culture that brought it to where it is looking at where this is all going, and they're saying, no, this is all moving in a bad direction. But, and again, I'm not trying to say that everything's good and dandy and fine and not to be concerned. But I think a lot of the ethos that got us to where we're at are being challenged, and I think they're going to continue to be challenged. And I think that it's going to move in a direction where a lot of people kind of use Bitcoin the way they want to use Bitcoin, especially institutions are going to use it very differently than individuals use it. And that's kind of difficult for people that's a difficult pill for people to swallow, and they don't like it. So I think that's part of it.
Coin Stories is proudly brought to you by Gemini. Investing in Bitcoin has never been easier with Gemini's Bitcoin credit card. Earn up to 4% back in Bitcoin on everyday purchases like gas, dining, groceries, and more, with no annual fee, no foreign transaction fees, and no exchange fees on your rewards. And this summer, get 10% back in Bitcoin at golf courses. Plus, sign up today and get a $200 Bitcoin bonus when you spend $3,000 in your first 90 days. Apply now at Gemini.com/Natalie. If you're like me and want to stay on top of Bitcoin without getting lost in all the noise, you've got to check out the weekly CIO memo from Bitwise Asset Management. Bitwise has been around since 2017 and manages more than $10 billion across 30 plus strategies. CIO Matt Hogan puts together a quick 5-minute memo that breaks down the biggest stories in digital assets each week. Just go to bitwiseinvestments.com/CIO memo and check it out. And always, of course, carefully consider the extreme risks associated with crypto. Coin Stories is also brought to you by Ledn. Need cash but don't want to sell your Bitcoin? Ledn is the global leader in Bitcoin-backed loans, issuing over $9 billion in loans since 2018. And they were the first to offer proof of reserves. With Ledn, you get custody loans, no monthly payments, and more. Visit ledn.io/Natalie. Where do you think we took a turn though? Because I feel like at the very beginning, when we were hearing about more Bitcoin treasury companies coming out, everyone was very excited. And I mean, look at, Metaplanet, what it did in just the span of basically a year and a half is incredible. But then all of a sudden people are like, whoa, they turned kind of bearish. They started to become a little more bearish on MSTR. And like, what happened here?
Well, I think the bearishness on MSTR is because it's gone sideways for a year, right? And so people that maybe bought it, call it a year ago, they were hearing discussions about how it's outperformed Bitcoin, this and that. And so they buy it. And their actual analysis as to why they bought it was everybody's talking about this. It's outperformed Bitcoin. Michael Saylor goes on an interview. He sounds super smart. Therefore, that end of analysis. Therefore, I'm going to buy MSTR. And then it goes sideways. Bitcoin has gone up slightly, not much. I mean, at the beginning of the year it was 100,000, and now it's, call it 14,000 or somewhere in that ballpark, 113,000. And so Bitcoin went sideways. And what happened to MSTR during that period of time is it got more and more levered through that period of time. And what happens when you're more levered against something it's a derivative of Bitcoin, so it's more levered and it's gone, the underlying went sideways. What's going to happen to the derivative that's levered? It's going to move even more with more volatility and more vigor against the underlying. And if it goes slightly sideways, maybe a little bit up, if it's a derivative and it's levered, it's probably going to go sideways and maybe even down just because of how leverage works. And so you have a lot of people that bought it and they haven't got the performance that they were expecting, and they're mad. And that's it. I think that's it. And you know what? If Bitcoin goes down, if Bitcoin goes down, let's say Bitcoin goes down 10% more from here, like your expectation on a derivative that's levered to that should be that it would go down more than 10%. It should go down like 20%. Like you can't expect outside performance when the underlying goes up without having the same kind of dynamic when it goes down. So I don't know what to tell people. Like,
When it comes to spot Bitcoin, why do you think we've had such sideways price action? Because we had a lot of momentum coming in, and the Trump administration, all these corporate treasury companies buying. So who's really on the sell side? What's putting that pressure on Bitcoin's price that's causing us to maybe have some headwinds on the way to 150 and 200, which people are still predicting for the end of this year?
Yeah. First of all, I don't know, but I definitely can feel the frustration and the pain, because like it just feels like every day there's another announcement of, oh, so and so company just bought 10,000 plus Bitcoin,
Right.
and the price was down on the day or whatever.
Yeah.
But if I was going to guess what I think it is, I think that you have fast money Wall Street traders, Jane Street, to kind of name one actor, and there's many of them out there, that like they're in the business of sucking volatility out of the market and really not having any exposure other than they're going long and short simultaneously, and they're arbitraging the difference. And what that does, if you're going to zoom out and kind of look like what does that do to a market that's going up, it's going to make that volatility continue to collapse as it's going up. So you're going to see the waves very large at the beginning when they're entering the market and conducting this fast money trade. And as it continues to progress along, the chart is up and to the right, but the volatility is getting further and further dampened in that process. And so that's what I think we're seeing. So a person would be like, okay, so like, where does that take us, right? And where I think it takes you is this scenario where the spring is coiling and it kind of pops one way or the other. The upward trend would suggest that it's going to pop higher, but you also have to understand that markets are highly dependent on liquidity. They're dependent on all these other external factors. So I'm not like one of these people that's looking at a technical chart and saying the volatility's collapsing, it's going up, and we're going to go to the moon. I'm not saying that, but because I think the external factors are way more important than people realize. The basic liquidity in the market is massive. When I'm looking at the liquidity metrics of just global equity is a great way I like to like just kind of view, like I'll look at all the global equity markets, and if they're all ripping, that's telling me that the markets are flush with liquidity, fiat liquidity. And right now that's what we're seeing. Like when I look at global equity markets all around the world, they're all like bidding. So to me, that's a healthy indicator that Bitcoin could go higher. But it also is dependent on like whether whatever the source of that is continues to persist and continues to be pumped into the market. So people just have to be careful. Like it's not a guarantee. None of this is a guarantee that it's going to continue to rip, or like that compression is signaling that we're going to 200K in weeks. It's not. To me, it's not that. But I think that's why we've maybe seen a little bit of what we've seen, which is this dampening of what we have historically seen in the price action, which is at this part of the cycle. If you want to even subscribe to this idea that the 4-year cycle is valid, you would have seen a very aggressive move kind of already taking place. And to be honest with you, back Christmas timeframe, I would have guessed by now we would have been way higher than where we're at right now.
I know. I think we talked about that on our macro hangout right around December. What do you think about the execution of these more recent corporate Bitcoin treasury companies that are coming out? I mean, some of them are announcing stacking massive amounts of Bitcoin. They've raised so much capital. I actually think it's really interesting if you start digging into the papers and the filings and the covenants, because they're all executing in very different ways. I'd love to get your broad overview.
Well, my broad overview would be buyer beware. read the prospectus.
Yeah. Which a lot of people don't, right? A lot of people invest without going into these documents and actually digging through the filings and what they're sharing with the SEC, how much people are getting compensated, what are the covenant obligations, and I recommend you do.
And you know what the beauty is these days, Natalie, is you can use AI to help you out.
Sure.
Like back whenever I was doing a lot of like reading the perspectives of various companies, like nobody could just like summarize it for you. Like you couldn't go into AI and say, hey, tell me the top 10 risks that you're getting from reading this perspective. And I mean, this thing will like literally like knock it out and like give you some really good feedback as to what those risks are. So like people have tools at their fingertips to help them go through all of these filings. And like, I would encourage you to do so. There's a lot of shenanigans happening. And I think it's important that like, although I love covering this topic and like really kind of getting into all the accounting and the mechanics of all of it, because it's super intellectually stimulating to kind of cover, I do think that there's a lot of risk out there with respect to like the capacity to actually execute and do something similar to like what strategy is attempting to do. And I'm not even saying strategies in the clear, like there's risks there, like of course. So,
I mean, I want to talk to you about sort of the direction that a lot of these companies are going in, or they want to go in, which is the preferreds. I feel like, and Saylor actually used AI for some of these, right? Which is just fascinating. Maybe just zooming out for people that aren't familiar with some of the jargon, you do such a great job breaking it down, because there's this capital structure, right? And there's a hierarchy, and the convertible debt, if you have a bond, essentially you're paid out first if in the case of like a bankruptcy, right? Which is worst case scenario, but there's a stack, right? Convertible notes are on top, then the preferreds, and then the shareholders are sort of lower on that stack. Can you talk a little bit about why a company would issue a preferred? Why is it even called a stock when really you're not getting equity unless it's convertible, right? So it really sounds like almost more of a bond, and it's a fixed income product rather than what it's called, which is a share.
In Security Analysis by Ben Graham, and I'm going to mess up this quote really bad. There's like this line in the book, and this book's from like the 1930s. And he's talking about, there's a whole section in there that goes through preferred stock. And by the way, I did a video series on preferred stock.
No way.
In 2010. So like,
I gotta look this up.
Like it's probably like 13 or 15 years ago, where I covered preferred stock in, I don't know, 3 different videos. I go into depth. I talk about cumulative, non-cumulative, like all this stuff. And don't laugh too hard because the videos are very cheesy.
I gotta look this up.
But I mean, I go through all of it and teach people how to, be a preferred investor. And this was like a decade and a half ago. But anyway, where was I going with? Oh, okay. So the Ben Graham quote from Security Analysis is that he says, if you're a preferred stock investor, you're pretty much getting the worst case of being a common shareholder. You're getting the worst part of that. And from a fixed income side, you're getting the worst part of that. And so he's in the book, he's kind of like, preferred stock is basically the crap stuck between common and
really
debt investing. Yeah.
Why?
But what I would say, well, because okay, so like the great part of being a common shareholder is if the company makes a bunch of money, you participate in the upside of that.
Right.
A preferred shareholder, you don't. On the fixed income side, it like when that becomes really important that you hold debt is if the company's going to go bankrupt. And so his argument is if the company's going bankrupt, you're probably not going to have anything left over for the preferred shareholder because the debt holders are basically taking it all that's left over in the bankruptcy. So you're not getting the advantage of that, and you're not getting the advantage of the upside, and therefore it's the crap kind of stuck in the middle between the two securities. So, but yeah, anyway, where I think the preferred stock is really interesting, though, right now in this moment of time, and I never would have thought about this, and I don't think Ben Graham writes about this in Security Analysis either, is when a currency is kind of melting down, there's this really interesting use case that strategy has really tapped into. And I'm not even 100% convinced that this is even valid, what I'm saying, but I find it an interesting dynamic that he's choosing to use preferred stock, mostly because he never has to pay back the book value on it. Okay.
Right. Right. So
So
when you raise a convertible note, you have to pay all of that back.
yeah,
Whereas you raise money with these preferreds and you're paying out the dividends, right? But you're not
yeah,
actually paying that lump sum. You put it into Bitcoin and you're making a killing over the long run.
that's right. So like the easy math of like kind of describing this is like, let's say you do a convertible bond, like after 5 years, if assuming you can get 5 years for the duration on it, like after that 5 years, if you borrowed $1 billion, you have to pay the billion back. And so whatever debasement happened against that fiat denominated billion, you basically got 5 years of debasement against that fiat denominated liability, and then you have to pay it back.
Right.
Right. So you got 5 years to like really take advantage of it. And so when you pay that back, and especially if it's convertible, like you're paying for it through the dilution of the common shareholder after that 5 year period. But if you've got preferred stock and it's perpetual and you're not really ever paying that back, you can allow that debasement of the fiat that all of that's denominated in continue to just like draw out. So like if you're dealing with a 10% dividend, you basically got like 10 years before like the face value has been returned to those the buyers of that preferred stock, and you still don't owe back the face value or the book value of it after those 10 years. You can just continue to so it in going back to my point, which is if you're dealing with a currency that's melting down, it seems like that might be the actual most optimal security to issue or to arbitrage against, because you just don't deal with the face value or book value of the issuance. But and I want to talk to the other side of that. So like the buyers of these, right? You could make the argument based on what I just said that you're totally screwing and then like screwing over the buyers of the preferred stock. But what I would argue is that those preferred shareholders, they don't want to participate in the common crazy volatility. They don't want that. They just need some type of stability in the dividend payments in the yield that they're getting. So like that's what they want. And so that's what's being delivered to them.
Yeah, they want fixed income, and these are delivering that at a much higher rate than the current system, right? And a lot of the other preferreds that exist out there with some of maybe the big corporations that people might be familiar with. So where people are getting kind of confused, like I'm trying to zoom out and put myself in the position of someone just looking in, not understanding the space fully, maybe not even understanding Bitcoin, and going, okay, well, if Bitcoin's going up at 40, 50% a year and they're paying out 10%, that's way more attractive than a standard bond. That sounds great. And then there's like a 30% spread. And so this makes a lot of sense. But wait, hold on. They have to raise money in order to pay the dividends because they're not selling the Bitcoin. Is that like where you think that some people are getting hung up on the fact that they have to raise capital in order to pay the dividends? It's not coming from Bitcoin sales because Saylor has said he's not selling the Bitcoin. Is that what people are having an issue with?
Yeah. In fact, I had a really interesting exchange with some folks on X literally this morning on this particular topic. And, people out there saying, oh, this is a Ponzi scheme, and going through like some of the mechanics. And one of the points that I would say that I thought was a really valid, oh man, I can't remember the name of the guy. I want to give him credit for the thought that he kind of put out there, but I'll just explain this this was Josh Mann kind of had some posts, and it was, pretty bearish and negative point of view. And then people were piling in there.
Oh yeah. Josh Mandel, right?
Yeah. Mandel, sorry. But one of the points that I thought was a really valid point that somebody brought up was, if you are issuing preferred stock, okay, let's say the mNAV is below 1. So, if you buy your common stock back when the mNAV is below 1, that's actually accretive in Bitcoin terms for common shareholders. Mm-hmm. And what the person was saying was, if the preferred share, if Michael or whoever would go into the market and issue more preferred stock to raise capital, okay, and you take that cash, and instead of buying Bitcoin, you would go buy the common stock. You are clearly at that point demonstrating that you're just benefiting the common shareholder at the expense of these preferred investors, which I agree with. I think that you would actually open yourself up to a legal issue if you were doing something like that. Like think of it from, you only own the preferred stock.
Yeah.
right? And you're going and you're holding these shares, and he's debasing the shares by issuing more to raise cash. And then he's taking that cash and he's basically putting more Bitcoin per share for the common shareholder. And like, that's it. Like, you are now being somewhat exploited as a preferred owner because it's not putting more Bitcoin on the balance sheet, right? From a nominal standpoint, from a company enterprise level standpoint, it's not putting more Bitcoin on the balance sheet, further collateralizing your holdings. What it's doing is it's just benefiting the common shareholder at that point. If you would raise further capital in preferred markets and just go buy Bitcoin, which is a commodity, then it's not. I don't see that being a legal loophole or legal issue for the company. Because at the end of the day, that Bitcoin is further collateralizing, the purchase of that is further collateralizing the capital stack of debt holders and preferred shareholders, which are in front of the common shareholder. So that would be an enterprise level decision that net benefits everybody. So that's, I think, really important for people to kind of understand that nuance. And I think this is a really important thing, that if you're running one of these companies, you better understand that, or you're probably going to get sued into oblivion.
This episode is brought to you by Casa, the leader in Bitcoin self-custody solutions, helping people like me secure their wealth with simple, powerful multi-key vaults. And now Casa is here to help businesses and even governments do the same. Introducing Casa Business, a secure, easy-to-use 3-key vault designed for small and large businesses with team signing capabilities and a web dashboard. Start your Bitcoin treasury the secure way and protect your assets. Get 10% off your Casa plan at casa.io/Natalie. Next up, Bitkey, a Bitcoin hardware wallet with multi-sig security, inheritance, and a recovery system designed for real life. No complex setup, no seed phrase, just true self-custody without the stress. Named one of Time's best inventions in 2024. Use code STORIES for 20% off at bitkey.world. Up next, the Bitcoin way. There's only one way to protect your Bitcoin from government, politicians, and third-party risk, and that is 100% self-custody. My friends at the Bitcoin way will train you how to do this the right way the first time. No compromises. Go to thebitcoinway.com/Natalie to speak with the experts about making sure your Bitcoin is secure and private. Want to win 1 million sats just by answering Bitcoin trivia? The top 50 players win free sats weekly. One lucky winner gets 1 million sats each month. With Speed Wallet, you can send Bitcoin, swap to stablecoins, shop gift cards, play games, explore mini apps. So don't miss Speed Trivia. Head to speed.app/coinstories and use code COINSTORIES10 for 5,000 free sats. People have also just made drama online about the change in the mNAV guidance, right? Why are people getting so upset about that?
Well, part of being a shareholder, whether it's preferred, common, holding the debt or whatever, is, the guidance that the leadership is putting out there. People expect it to be somewhat sticky guidance, like you're not going to kind of change your mind within a couple of weeks. And so I think, when Michael put out the guidance, or the leadership at MicroStrategy put out their guidance that they weren't going to be issuing any additional common stock for, I think it was below a 2.4. Initially, everybody was pretty excited that they weren't going to have like this dilution happening from the common shareholder standpoint. But what I think the broader market saw it as was, you mean to tell me if the mNAV's 2, you're not going to go buy the Bitcoin for half off? Like, what are you doing? Like, the part of the whole strategy here is that you can basically go into the market and treat your common stock as if you're, the issuer of a fiat currency almost, and go out and buy these things for a super cheap price relative to what the mNAV is. And so the market reacted very negatively to this. The scuttlebutt online was extra negative, and Michael quickly recognized, I don't know who, I don't want to say it was Michael, but the executive leadership at MicroStrategy recognized this very quickly, and they did an about face. People weren't happy about that, because you got to realize everybody positions themselves based on the guidance that the management is putting out there. They then all go and position themselves accordingly based on that guidance. And so if you go out and you change the guidance again, now all of a sudden, if you were positioned long or short or whatever, you get caught in a situation where the management is appearing to flip flop, and like if you're positioned a certain way and it flip flops against you, like that can be a very bad day. So that's why people were upset.
But I feel like you made a good reply to one of the tweets, which is, if something like this happens, what do you want to see in leadership? Someone that reacts and does the right thing and, adapts, right? I mean, sometimes things change or they reevaluate things. So, I guess if you want to just kind of be on the bullish side of all of this, it doesn't seem to me like MSTR is dying anytime soon. I think everyone's going to be fine. If anything, this might be a good buying opportunity.
Yeah, I would agree with that. And it doesn't mean I'm right or you're right or whatever. But what in life, the person, the animal, the whatever that dominates their environment is the one that can sense their environment very clearly and sense truth and react to it the fastest. Mm-hmm. If their mental model of like how their environment works is flawed, the speed at which they can change their mental model is the one that will become the apex predator.
For sure.
Okay. Like period. So I'm just looking at it more from like, I could care. Like people are like, oh my God, you're this chill or whatever. No, I'm just using first principles to assess what I think is the best way to navigate or to affect your environment, which is you need to be able to change your mind. You can't have sunk cost bias, or there's all sorts of biases that pop out of like just this idea alone, which is, here's one, consistency bias. Okay. People refuse to change their mind because they feel that when everybody socially around them sees them change their mind, that it's viewed as a weakness. And so just because of the social dynamic, they're hesitant to change their mind because they're afraid they're going to be viewed negatively. And what I found is like people like Stan Druckenmiller, he'll do interviews and he'll be like, well, this is my opinion today, but I could literally change it before the end of the day and take the exact opposite, position and be short by the end of the day. So, take with it what you will. This is my opinion right now at this moment in time. And that is, in my opinion, that's the hallmark of somebody who's going to really do well in capital markets, because they don't care what anybody thinks and they're very quick to kind of change their mind when the facts and circumstances change. So
right. And sometimes you do need to pivot and move things in a direction if you sense something or realize that maybe the environment has changed or, you didn't consider something before. So I completely agree with you. Kind of going back
in general, like just on that topic of like, should you issue mNAV guidance? When I'm looking at, what is the best way to kind of go about this? Having optionality is a profoundly valuable thing at all times. And so when you say, I'm going to do this no matter what at these points, you're signaling to the market that they can kind of take advantage of whatever those handcuffs are that you just put yourself in.
Right.
And so when I look at the initial guidance, I actually thought the market was going to respond very favorably to it. And what was funny is it didn't. It actually did the exact opposite of what my personal expectation was after seeing it.
Wow.
But I would just say in general, anytime you put a self-limitation on yourself that this is what I'm going to do, it can be pretty damaging because now you're just literally taking your flexibility and optionality away.
Going back to my earlier question, just about the idea of raising capital in order to pay dividends, can you explain, I guess, to people out there that look at that and say, that's the thing I'm having an issue with? Like if you were to sell the Bitcoin, that makes sense to me to pay out the dividends, but I don't like the idea. To me, it sounds like a Ponzi that you're raising capital to pay the dividends. Like, how does this make sense for those folks that are having trouble with it?
Well, I mean, all he's doing is just taking the legal, capital stack, and he's looking at fiat and he's saying, I think this is a scam. I think this is a Ponzi. And
fiat's the Ponzi. Yeah.
Fiat's the Ponzi. And I'm going to lean into Bitcoin because I think it's going to continue to have this growth and this network effect and adoption across the world. And I'm going to stack that and I'm going to denominate liabilities in fiat. It's really that simple. The thing that I want to preface for people is, if you're buying, like, call it stock and strategy, it is completely predicated on Bitcoin being this engine that continues to go up relative to fiat. If it doesn't do that, like, that entire company is at risk long term. Like, if Bitcoin would go sideways or down for 3 or 4 years straight, it would be a real problem. Like, it would be really messy and somewhat disastrous, right? And so if you're buying that equity and you don't understand that, that's the core engine, is Bitcoin continuing to go up. And I think that part of the math is he expects it to maybe go down for a year and a half and get punished, call it 50%, but then it will rebound and it'll recover. I think that's part of, like, how they've modeled things.
Right.
But if that model's incorrect, Natalie, it could be incorrect. Like, I'm not here to tell you that it's destined or whatever, that Bitcoin will always go up. I have no idea. I mean, I think it is based on everything I'm looking at, but who knows, right? If you're buying the equity and you're not understanding that core fundamental thing that's the engine, which is Bitcoin keeps going up, then I don't know what to tell people. Like, it's a free market.
Right. I mean, well, and if Bitcoin keeps going up, securities like this can outperform Bitcoin, which is, I think, what attracts people to it, right? Yeah. On the flip side, if there are some bad years, which I guess a lot of people are thinking that that's behind us, that a Bitcoin bear market can't last that long, it can't dip too low. And Michael Saylor said on the earnings call, which I thought was fascinating, when Lynn Alden asked the bearish question, right? Like, are you prepared for a stress test? And he said, yeah. I mean, in the case of an 80% drawdown, things would be totally fine. These new products that he's launched are over collateralized, right? But I think that's because most of us think a 90% drawdown in Bitcoin at this point, with this level of adoption and the institutional side coming in and the regulatory favor that we've gotten, there's no way. But I mean, do you think that we could see something that bad? I mean, I guess I'm not in that camp, and I'm not the most bullish person ever all the time where I think we're going to 1 million next year, but I just don't see us going down 90%.
I just think that the bid in Bitcoin is highly dependent on the liquidity of the fiat system.
Yeah.
Right. Like, that is, if they are just adding tons and tons of fiat monetary units into the system, Bitcoin's going to bid, in my opinion. And this isn't something that, like, anybody knows for sure as to how aggressive are they going to add more fiat units into the system. Or are you going to get an administration in there, or are you going to have this global cooperation that they really try to, tighten? I would argue that the start of this administration, this current administration, that was what they were trying to do. They were trying to actually, I think, trying to get their spending under control. I mean, I was sitting there kind of smirking, like, there's no way they could actually do this. Like, get the spending under control. They're going to do these tariffs. That's going to create this revenue. They're not going to have to debase the currency, because it's a global problem. It's not just a US based problem. So even if the US did these things and were able to, like, get it all under control, like, you're still competing on the global stage of fiat debasement in order to stay viable and not have all your resources and equity, like, basically usurped from the ones that are printing faster. So that's why I'm super skeptical as to, like, the government's ability to ever rein this in. But to the point that I'm trying to make, which is, like, we just don't understand the velocity of the printing and the pace at which they're going to debase. And so that has an impact on the flow of funds that come into Bitcoin.
Yeah, for sure. I mean, I feel like a lot of people were expecting a big print to come in a little bit sooner, because they didn't think that the market would withstand these high interest rates for as long as it has. And, obviously that's why we have brilliant people talking about fiscal dominance, because everything has been thrust on that side as opposed to the monetary policy. But we're in such a wonky position. I mean, I saw you retweeting some of the stuff about the housing situation, how unaffordable things are getting. But now prices are starting to change. It's starting to become more of a buyer's market. Like, new home prices are now starting to be lower than older homes. Like
Yeah.
older homes are more
Yeah.
expensive, which is
Yeah.
interesting because I blame fiat building.
I
But
think
it's
that's
just,
a factor. I think that's definitely a factor.
yeah, but it's just crazy because
Yeah.
it's like there are all these weak factors in the economy. And I mean, everywhere I go, people are just talking about how high prices are. I've been doing work here in the new place that we moved into, and all the material is so ridiculously expensive. And everyone just says, yeah, ever since COVID, ever since the pandemic, it was like half the price a couple of years ago. So we have these high prices. We have a lot of issues. I mean, unemployment starting to creep up a little bit, but yet it's like, no, the economy is the best ever. Everyone in office just tells you it's the best it's ever been. Don't pay attention to the numbers. Everything's great. These tariffs are going to bring in billions for us. We're going to have more tax cuts. And like, it's hard to figure out what the reality is and when that next maybe crash trigger is going to happen, because we know that they're going to have to come in. There's going to be some sort of situation. You always point to the bond market, right? And Luke Roman talks about that shadow third mandate. The Treasury market has to be functioning. At some point, it's going to have some trouble and they're going to have to come in and print, right? But trying to figure out when this is all going to play out or how, that's the tough part.
Yeah, I think that, and you have a lot of great like comments wrapped into this. What I would just say generically is you're seeing this bifurcation between what equity markets are doing and what was usually a really good sign of like where we're at in the overall credit cycle, which is if the stock market's at an all-time high, everybody's just doing really well, was pretty much the generic, like it was in harmony with each other. Like the credit flowed into the system, everything got bid, everybody was doing good. And then it would slowly unravel. And when everybody was doing bad, the markets were going down. You now have this dislocation or this bifurcation where stock markets are at an all-time high right now. But I would argue if you went to anybody in the middle class or lower class in the country and said, hey, how's things going? Do you feel like you can afford things? Everybody would be like, I'm levered up to my eyeballs just trying to make it by on what I've got, and I can't afford to really do anything right now, is what I think the general market sentiment would be, which is one of the reasons why you have Trump and all these others like kicking and screaming at Jerome Powell to drop rates.
And everyone's expecting the rates to come down, even
Everybody's
like as low as they were.
Yeah, and think about that. They're kicking and screaming about rates to go down when literally equity markets continue to put in new all-time highs.
Crazy.
It's crazy. And so when in a mechanical system things break down, or when you start getting resonant frequency, you literally have the forces are literally hitting at the exact wrong frequency with each other. And that's how the machine literally eats itself apart. And so what I would say is, like, we are finally starting to see examples of that in the market, where equity markets are sky high. Everybody's still feeling pain despite that setup, and they're screaming for rates to be lower and maybe even artificially kept lower so that everybody can refi their house. Right. Like, what do you think the ramifications of that are going to be for the prices of homes long term? They're going to rip. They're going to rip even higher than what you're already, like, if we jump 5 years into the future. So all of these things are a manifestation or an example of the currency melting down, in my humble opinion. And so, when people are like, oh my God, how in the world can anybody afford a house? Well, just go like price the house in Bitcoin for like the last 10 years every year. And what you're going to find is the price just keeps going lower and lower and lower.
Yeah.
And if somebody's like, what did he just say? Yeah, rewind the tape and listen to what I just said. The prices keep going lower and lower in Bitcoin terms. And it's just going to, in my opinion, it's just going to keep going that way.
Well, that's the thing that confuses me, Preston, is Bitcoin is so clearly that solution that people are crying out for, even if they don't realize it. And you'd think that they would maybe pay attention a little bit more. But I swear, this is the most bearish bull market I've ever seen. It's like retail mainstream doesn't care. I'm hearing some of the same things that I heard really when I was really starting out in Bitcoin. Like, this is a Ponzi, this is this. All the people who own it are corrupt, blah, 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 blah. they're not reaching out for the tool that it really is. I loved that tweet. You probably saw it, that the Harvard economist that tweeted about like how, he's obviously not the problem. Bitcoin's the problem, and he didn't realize how stupid everyone was to adopt it.
Gold. That was, oh my God, was that funny? And all the comments were off. All the comments.
Yeah, I know. He doesn't even have the courage to allow us to respond to him. But also, I saw that clip that I shared with you from Dave Collum and Tucker Carlson talking about how Bitcoin is a tool of the state. It was created by the state. They're never going to allow us to be free with it. They're going to control us. This is just going to usher in central bank digital currencies.
I believe that the authorities are not going to let crypto take over.
Of course not.
And by the way, that means that
they're going to lose total control over society.
That's right.
I don't think so.
You think the Rockefellers and the Rothschilds are going to hand it over to Max Kaiser and Michael Saylor? I don't think so.
I wanted to get your perspective on this because I just don't get it. Like, to me, if I was struggling, which I was, this is like me when I found Bitcoin. I was struggling. I didn't understand it. I knew that there was a problem, but I was like, what the heck is going on? Can we please just tax the rich? And then I found Bitcoin, and I started to hear about it, right? And I'm like, is this a solution? Like, maybe I want to learn more. Maybe. And then I dug into it and I'm like, oh my gosh, this is the best thing that I found that could address these issues.
Yeah.
Why aren't more people doing that?
Okay. So I've had Dave on the show. Dave's super smart. The Dave Collum, super smart guy. I think he's up in, what's the university? Greg Foss and others went to, that's what
Yale. No,
it's not Yale. Oh my gosh. Okay. Edit that out or whatever. I totally mind melt. It begins with a C.
Columbia?
No. Oh my God.
It's not Columbia. It's not.
Ella went here.
Cornell.
Good God.
Is it Cornell? Was it Cornell?
It's Cornell.
Okay. Cornell.
It's Cornell. Keep it all in the show, Natalie, so people can see what these conversations really look like.
It's Cornell.
It was Cornell. He's a professor up at Cornell. And anyway, he's done a lot of research on like all the weather stuff. And he's just a really smart guy, deep thinker. But this is the thing that I can only hang my hat on after seeing this time and time again in this space, is at your core, if you just think the world is going in a bad, and I had this conversation with Efrat over in Lugano. Mm-hmm. If at your core, you're just kind of a negative person and you think that the world is just going to hell in a handbasket, the robots are going to come, Natalie, and they're going to take all of our jobs. We're going to be pets to the AI, like all of that. If you believe in your heart, like deep down in your core, that the world's just going to hell in a handbasket, when you think about something very complex and when you look at a potential solution, that core belief that things are always going to be worse is going to help you deduce that that's where it's all going. And therefore, anything that could potentially offer a solution or savior to this terrible world will be spun into that type of outcome or point of view. And so like his comment that the US government created it, or one of these 3-letter agencies did it from the beginning, and it's all just a giant scheme or scam to pull. Okay, well, let's pull on the thread. Okay, let's say that is true. Is there some part of the code that's not auditable that you can't go in there and assess, right? No. Okay, go use AI. Say, like, what in the code? Like, look at you could upload the code base of Bitcoin into, like, how can I exploit this code for my own personal benefit? Assume I am a rogue government agent that created this. How could I exploit it against all the people? Like, ask these questions, go in there, dig around, and I don't think you can find a vulnerability in it. Mm-hmm. And so when people wave their hand and they say things like this, it's like, okay, well, let's get quantitative and like, let's back up the statement. Let's figure out prove to me how it could be. So when I see stuff like that, I just point to, well, there's a pessimistic person. And When you interact with AI, if you start off and you seed the conversation with a very negative or like dark undertone, what you get back from it is going to be some flavor of that dark dystopian point of view.
That's so true.
Right?
Yeah.
And
how
so,
you feed the AI is very important.
That's right. And so why would you think that your environment that you're operating in life is any different than that?
Yeah.
If you go around and you're interacting with people all day long and everything is like, instead of smiling at somebody, you're frowning at the person. Or when they say something positive, you're just like, yeah, but it's terrible today. Like, is that person ever even going to like want to talk to you again? And so like, it's a broader theme and like idea that what you're feeding your environment is somewhat of a reflection back into your own soul and like who you are. And Bitcoin aside, I just think that it's such an important idea for people to think about. And like, what are you feeding into your environment all day long? And, if you're not real happy with your life, maybe start there and think about what you can do to maybe change the way that you're providing these inputs into your own setting.
That's really profound. It reminds me of what Jeff Booth always talks about, which is that if you look out and you see negativity, you're going to get negativity. If you look out and see love and abundance, you're going to get it back for sure. Do you feel like people are just one way or another, or do you think there's some way to help bring them, especially with something like Bitcoin, to the more positive side, to see this as a tool for good, as opposed to focusing on, there's always going to be bad. There's always going to be greed. There's always going to be corruption. But I can't think of anything. I can't think of a technology that empowers more people across the entire spectrum, right? Regardless of where you're from, whether you're wealthy or poor, benefits you so much, and gives you back some of these fundamental freedoms that are really core, that, things that like our Constitution was really founded on, and returns that to you and gives it to you in a way that can never be taken away. Do you think that there's a way to like make people see that, and has something worked with you when you talk about Bitcoin? Or do you feel like people that are just negative, you just got to let them be negative and come around to it themselves?
At the end of the day, it's the individual's choice for sure. I do think that some people maybe enter this life in a way that it's a little easier from the start than others. And so when you're thinking about, like, let's say you and I go out and play a game of golf. If I give you a handicap of like 20 strokes and you go out like, and you beat me because I didn't have any strokes to start off with, like, you're going to kind of be in a position where you're like, hey, this game's kind of fun. And I'm going to be more of in a position that like, this game kind of sucks.
Yeah.
And so like, I'm not naive to the idea that some people kind of had, let's call it a head start in life, and it's a little easier to kind of view things optically from a very positive, point of view. But at the end of the day, and at a certain point in that timeline, call it you're 20 years old, like, you have to somehow figure out a way to course correct or start looking at things maybe with a more positive lens, despite maybe the hardship or the difficulty that you started off your life with. And I don't have any advice for that. I do have some advice for that. The more you can surround yourself with people that you admire and that you want to be like, it's going to rub off on you. It's going to have an impact at some point. And so, and that works both ways too. Like, if you're constantly around people that are just like negative this, negative that, like, it's going to have an effect on you. So change up the people in your environment as best you can if you feel like they're kind of one versus the other.
Well, I get sad that people are so distracted by like the political things that they get really negative. And I feel like that's where a lot of the attention is, even for podcasts right now and content in general. People love all the political stuff. It's like this team versus that team. And even the red and blue teams are starting to splinter and like fragment. They're all mad at each other too. And it's so sad, because it's like Bitcoin staring everyone in the face and they don't take it seriously yet. But we'll keep doing our hard work trying to reach people, I guess.
Part of the challenge, and I've talked about this a lot, is if you don't have disposable income, or you're like not making any type of savings at all, you're really going to have a hard time even saving in Bitcoin, because you're just trying to make it to the next month. Right. And so that's going to be lost on a lot of people. And then something else that I think is a dynamic that's starting to play out is like boomers buying, let's say that they're buying the MicroStrategy preferreds and all this stuff. Like, they're not interested in Bitcoin from the lens that you and I are maybe looking at it from. They just want the income.
Yeah.
And so I think that maybe a big wave of investors are actually going to the next wave of adoption is going to actually be very passive, paperized Bitcoin, because people just want the income, and they don't even really know that Bitcoin's behind what it is that they're receiving income from.
Well, this is why I don't understand how people could be bearish on MSTR, because these products are so revolutionary and they offer such a higher yield than whatever else is out there. There's going to be such demand for it once people wrap their head around it a little bit more, I think. And that market, the fixed income market, is just massive and ripe for a revolution like this, right? Yeah. So it's just going to be interesting to see how this plays out going forward.
It's going to take some time. I don't think it's going to be very obvious how it continues to just kind of like extend its tentacles and kind of reach into everything. And I think that a lot of the adoption is going to be in a way that people don't even understand that they have kind of somewhat adopted it and are using it. It's way into the background. And this goes to our original conversation, which is the culture clash. Mm-hmm. As it's being paperized and it's being turned into these things that people never imagined, or don't think, a lot of people don't think that that's a good thing. And that's for a whole nother conversation as to like the vulnerabilities of some of this stuff being paperized. But I think the next wave of adoption might not be what a lot of people kind of wanted or expected or were prepared for.
Yeah. I mean, to our earlier points, I think every company is going to have Bitcoin on the balance sheet. So in some way, every company is going to be a Bitcoin treasury company. In the same way, every company is an internet company, right? Every company has money. Like Bitcoin's going to become more universal. To
that point, to even pull on the thread more, they might not even, if you looked at their balance sheet of, let's say you're Apple, okay? And let's say Apple owns SPY, the S&P 500 ticker, okay, as a marketable security listed on their balance sheet. And let's assume MicroStrategy gets included into the S&P 500. Mm-hmm. Okay. Now, all of a sudden, Apple has Bitcoin, quote unquote, on the balance sheet. It's a really small portion. And it's through this derivative of a derivative of a derivative. Mm-hmm. And so this kind of goes to where I think a lot of the culture, the Bitcoin culture that kind of brought it to where we're at, has issues with that. They're saying, I don't want it to be paper on paper on paper. But I kind of suspect that whether people like that or not, that's where the next wave of adoption might be coming from.
Well, and to the point that you've been making on your shows, which is really important, there's nothing better than self-custody Bitcoin, right? So
I'm trying to
go out and get that. I mean, evaluate the risk on the spectrum of all these different products that you have available. Yeah. Some of them I'm actually really, really excited about, and I'm a holder. So there's lots of fun to have in the space, but also spot Bitcoin in self-custody, in multi-sig, please, everyone. Yeah. We've got tutorials on it. Just go there. Any final thoughts, Preston?
No, that's the most important thought of the whole conversation.
Well, it's been great to see you. I hope I get to see you in person soon. Thank you so much for joining me. I hope people listen, even though you were just on another show, but that's par for the course with these Bitcoin podcasts.
Thank you, Natalie. And for people that don't know, Miss Natalie has a book coming out soon. So I don't know if she's been talking about it, but I'm sure it's going to be amazing.
Yeah, so. I can't wait. Can't wait to share it. We'll chat more about it soon. But thanks so much, Preston.
Thank you, Natalie.
Thank you so much for checking out this episode of Coin Stories. Make sure you're subscribed to the show so you don't miss any new episodes. And if you can, turn on those notifications and leave us a positive review. They really help the show grow organically with new listeners. We have a free weekly newsletter. You can sign up at thenewsblock.substack.com. This show is for educational and entertainment purposes only. Nothing should constitute as official investment advice, and you should always do your own research. I'm always open to feedback and guest suggestions, so please feel free to reach out at info@talkingbitcoin.com. I'll see you next time.